Welcome back to Digital Real Estate. We are here again. We got Bitcoin up. Things are moving finally as we anticipated. Today we're going to be looking at things from a larger time frame. Thanks for tuning in. Please hit the like button, subscribe, and the notification bell to keep the content rolling. We'll get right with you in a moment here. All right, so what we got up here is the weekly chart in front of us. The significance of this blue arrow that you're seeing right here is basically where I'm seeing the market, where it's at in comparison to the last run. That was somewhere around March of 2017. So, obviously we still had, 9 months or so of upside from that point. 8 months, depending on how you want to look at it. So my point to that is, if you look at the past 2 cycles, and people say, well, you really can't compare the two. Well, that's not what I'm doing. What I'm saying is, if you take the previous lows, the second low of that bear market, and I'll give you an example of what just occurred over the last 4 years. So right here we had our first basically bottom of our bear market or our down market, whatever way you want to call it. We had a low of about $3,100 depending on which exchange you're on. Then we broke out of our overall trend line, stayed above, created a high, and then descended back down. And we had our situation occur with whatever the media wants to portray to y'all. So then that just drove the market down. People started selling off, panicking for no reason, but that's their business. I don't get like that. You know what I mean? You could tell me whatever. I mean, unfortunately, I live at a higher consciousness, so y'all can say what you want. But in any event, we went down to 3,800. Okay, so this was the second low of this bear market or down market. So in other words, it's like a double bottom. Okay. In other words, this is a bottom, this is a bottom. There's 2 bottoms that are pretty close to each other. So you look at it as a double bottom, especially on a longer time frame. So when we get that second low in the market, from that point forward, Bitcoin over the last 2 runs went up at least 100 times from that price. Okay. Now, not saying that's what's going to happen now. I'm just saying that's what had happened in the previous cycles or runs or whatever you want to relate to them as. So again, this is the weekly chart we're looking at. Each candle represents a week. Okay, so now if we look back here at our previous lows from the run prior to 2017, it was basically around October, November. Okay, we hit somewhere in the $2 range. Okay, from that point forward, we went up all the way to about $1,150. Okay, and you can see how long it took. Okay, so you have basically October is your low of 2011, and then by the time we hit December of 2013, which is basically 2 years later, we found a top, and then from that point on, it just we got way above our trend. I mean, you can even see when we did break over it, we wicked up, wicked back down, kind of just consolidated, touched it, and then retested it, and then exploded up real quick. I mean, this is only about 6 or 7 weeks here, from the low to the high in this session, and then from previous till here, you're talking roughly around 2 years, 1 month, 2 months, something like that. Okay, so now we fast forward to the last run in 2017. You saw you had your bottoms here in 2015. So this was your first bottom, January 2015, and then your second bottom wasn't until August. Okay, the price was around $200. You can see the low, 198.12. Okay, what did the price do from that point? Well, we fast forward 2 years. 2 years gets us to about right here. Okay, we found a high in this area of about $4,500. Okay, so now you add a couple more months, technically 4 more months or 5 more months. It was, excuse me, 4 more months of the run left, and then you got all the way up to basically 20,000. Okay, so this price went up 100 times from its second low. Okay, the first one took basically its second low. We'll just say it was October, and then it topped out in December. So we'll say 2 years, 2 months. The second run was 2 years, 4 months. So let's say it goes 2 years, 6 months. So that's September of this year, because the low is March of 2020. So if you add 2 years, 6 months to this low, that would give you a top roughly of September of this year. I'm thinking maybe July. Figure maybe it just replicates the same amount of time that it did in this run. Maybe it'll add those 2 months. I mean, we'll see as the price goes up. This is what we're playing. We're not saying this is a guarantee of financial advice or anything like that. This is what we see the market replicating. We trade Bitcoin every day, and we have for several years. So, we're comfortable and confident in making these calls for our own sake and our own portfolio. I'm not suggesting anyone else do that. Again, this video and channel is just for informational purposes and entertainment. You can take it however you like. I mean, yes, sometimes you may make out great and sometimes you may not. That's why you want to seek financial advice from somebody who has that title under their belt. My job is just to provide content based off how I see the market and how I'm playing it. If that makes any sense to you. So over this overall trend that we're seeing here, we can see the price just kind of follows it. It'll lead under, it'll go over. When it starts to come under, that's really your best time to buy. Okay, so you can kind of see here, we kind of just rode along it mostly in 2016 into 2017 until we got into the spring, and then that spring basically gave us a spring over the line, and then we came back to retest it, just too much buying pressure, and then you could see it again, and then finally we topped out by the end of the year. All right, and then we had a CME contracts basically kick off around that time, and that just allowed the bigger players with a lot of money, understanding the market and how it was pushed up, that the buyer exhaustion was there, and the easy play was to short it down. So they made out great, as you could see right here, and then basically they probably kind of got out of it, and then it just took a rest for about 7-8 months, and then December of 2018 is when we found our first low, and then our second low wasn't until March of 2020. Okay, but we got there, so if you just kind of follow what the price did prior when it was under the line, and then what it did when it went over it, you can kind of see, we had some little pops over the line. It doesn't look as drastic as the ones that we've had now. You can see when you zoom in, there's not much lift in the price, and then here there was, and then it didn't go back under. So not, like I said, completely similar, and you can't really compare cycle to cycle, but I'm saying if it takes the same amount of time, then that would put us somewhere in July, August, September. So I'm going to go with July is the top. I mean, I could be wrong and should have said September, but I'm just going to go with July, just based off of a little bit of history of just trading this asset. Usually we get the tops at the end of the year. I just think this time it just needs to be different, just based off the halving cycle starting at a different time, the bottom being set in at a different time. The bottoms were set in at different times before. So, you really just have to pick at this direction which way you're going to go. Now you can see overall this asset's not going down. I mean, it just keeps continue climbing. It's just following this ascending line, and this line will continue to stretch out as time goes on. Our short-term target, like we've talked about in other videos, on the upside is 54,000. We've already hit the low of about 39.5. We knew that needed to be our bottom right here. If that doesn't hold, then we're going to see 30,000. So right now, it is holding. We're at 43.6, so that's a good thing. We had 30,000 coins be removed from the major exchanges yesterday. So remember, we had that little bit influx going into the end of December. We saw a little perk up in the price, and then it went back down, and then it kind of just fell out. Well, now we've seen coins come back off the exchange, and now the price is beginning to rise back up. Like we said, around the 11th, the price would just start to swing back up. Weren't sure if we were going to break the trend or not, but we were going to wait for that and see what would happen. Now we have the confirmation of a double bottom. I mean, we're $4,000, basically 10% over our recent low, which is a double bottom from September. So there's really no reason to get skittish, at least for us. I mean, we're playing this market long and also on a buying stance. We've had a couple, good things come out in the market. We have one investor who's now put in 50% of their net worth, roughly around $200 to $250 million. May not seem like a whole lot in the market, but for one individual, it is a lot, because if you got one player who's kind of been in the financial game for a while, and now all of a sudden he's putting his money where his mouth's been, and you're just going to see a trickling down effect. Just kind of like how investors followed other successful investors in the past, especially when they start seeing great returns. They don't want to miss out on the boat, so they're going to jump in. That'll drive the market up. It looks like we've set our floor, like I had mentioned. They basically got in. You could kind of see the other day there was a lot of volume coming in when we got down just below 40,000. And even at 40,000, you could just, even though there was selling pressure, there was so much buying going on. And that just, lets you know that, look, the market needed to see a double bottom. And it generally does. It just needs to see pretty close to it, like a point where, okay, it has a low, it'll go up, it's going to come back and look for that low again. It may not match it perfectly. It may be within a few $100 or maybe 5 or 10%. But it gets pretty close to it. And earlier this year when we had the one in January, the low of 28.8, and then in the summer of last year we hit it 28.8, 28.790, close enough, right? You could just see the market just stopped and paused, and we kind of have that going on now. The market just stopped going down, and it's kind of pausing right now because it's basically going into a reversal pattern. And what occurs when that happens is you start getting these ascending push-ups, okay, as things start to reverse. You can kind of see there's a double bottom formed here, and then you get your push-up. You have your double bottom here, and your push-up. Now you're having your double bottom here, and you get your push-up. And we're anticipating about $88,000. We are basing that move off of our previous high to our trend, and wherever that breakout may be, we'll place it there, and it's roughly, about 88,000. And how long? I mean, it depends on the market. I mean, we don't make those decisions, obviously. So you just have to be patient, put yourself in the position you're looking to be in, and ride it out till you get to your goal. Or, if you're playing percentage games or whatever, or just day trading, looking for quick dollars, all well and good. But you got to be careful, if you're doing that, because you can get caught up and stuck in something. And if you don't have, a quick hand or a stop loss, or you lose track of the market because you have things going on in your personal life, and you're in a trade, a lot of things can change in the short term, and you can incur some losses. So it's best just to, wait like we did, and wait for that moment where you see the market kind of turn back up. So we're going to zoom in now. Now you get the overall picture of where we think the market is. We're not going to tell you our full prediction of how high we think the market's going to go. We have our short term at 54,000, our midterm at 88,000. So we're going to go back into our chart that we've been using to trade on a daily basis. And we're going to see how things are shaping up here. We'll zoom into a smaller time frame here. Go with the daily, just so we can kind of see how things play out, So here you go. In our other video, we had mentioned, if we didn't kind of hold above this line, we were looking for that target of 39.5. Well, we got 39.625, so close enough, right? So once you got under 40, if you had confidence in the market holding up, you would want to put yourself in a position to go, long or buy, and then you're going to reap the benefits already of a 10% gain. um, in a matter of 2-3 days. So it's not bad, right? I mean, how many markets can you make an easy 10%, in a couple of days? Now, obviously, you could have made 40% or more, depending if you leverage coming down on a short from the top of the channel. Again, we're below our channel. We did not say that wasn't a possibility. We just said it's more than likely. But now that we are there, it's great because we just confirmed a double bottom. We also have better opportunity to buy lower, and we could see we're swinging back up. Like we said, we would probably around the 11th at the end of these trends coming together, the price would start marching back up. Okay, so we hit some resistance here in the $45,000 range, and then come back down and retest, and then eventually get through here, and then start getting up into our higher range with a nice uphill climb, like we've seen in the previous months. You can see you kind of get one of these guys, boom. So, basically look at this, like here's your wick right here, and you had a push up in the market like we did now. Then it comes back down again, maybe not to fully retest this line, maybe, hits here, comes back in this range, and then, goes back up again and comes back down again, like to here, and then finally reaches the 54, and then maybe hits some resistance, and then start going to the higher target that we're looking at of about $88,000. So, the short term again still 54 for the upside. The midterms 88,000. We've already hit our targets on the low end. I don't see the market going any lower, especially with the response from the market, with the volume that came in when we hit the low, and then also with the inflation numbers. I mean, this is a hedge against inflation. The price moves erratic, but you have to understand if it didn't go up as much as it has, or have these these big uphill moves, then we wouldn't have these big downward moves either. So you have to kind of understand that you're going up a lot, but you're going to go back down too to retest those lows, and that's all we do constantly. So if you just get in that mindset, you're going to be fine. You're going to be able to trade this better than anyone else in the market, because everyone's so sucked in on volatility or whale manipulation or whatever. So don't get caught up in that nonsense. Just play the chart for what it is. Stick within the trends. Um, I get people who are going to say whatever. That's their given right to do that. But as long as they're not harming anybody, right? So. This is what it is. I mean, there's really not much to get bearish about. And in the short term, I wouldn't get too bullish. We've already had a 10% move up. Let's see how the market responds over the next couple of days. Add to our positions, or maybe start getting into a position. I wouldn't jump in right now. I don't see the market just kind of blasting right up. I expect it to kind of, come back down here, maybe form like somewhat of a W pattern, and then actually break through back into our channel, and then just ride back up like we have forecasted for the last couple of weeks. So, that's all I got for you guys today. I hope everyone's having a great day. Thanks for tuning in. Appreciate you. Please, again, if you could like the video and subscribe, and don't forget to hit that notification bell so you can keep the content rolling on your homepage. Take care now.